Hi, everyone, and thank you for joining us today for our podcast, Everybody Counts, which features various perspectives on a variety of topics. From the latest SEC and FASB updates to discussions on recruiting, retention, and more, Everybody Counts explores trends and hot topics that affect us and those in our business. Tune in to hear from partners and staff alike. The conversations are versatile and everybody's input counts. Today we are discussing the new FASB Accounting Standards Update, which we'll refer to in this podcast as an ASU. And this one is regarding business combinations and a clarification of the definition of a business. I am joined today by Steven Vertucci, an audit partner here at Malone Bailey. Welcome, Steven.
Thank you, Raven. I'm glad to be here.
So, Steven, tell us a little bit about your background.
Well, I'm an audit partner at Malone Bailey, and I've been here for about 18 years. And for most of those years, I've been doing public company work and mostly audit work.
Great. So let's jump to the topic at hand. Can you tell us a little bit more about this new ASU and how it's different from what's currently in place?
Well, the ASU tackles the definition of a business because the definition of a business affects many areas of accounting, mostly in the areas of acquisitions and consolidations, and the amendments are really intended to help companies and organizations evaluate whether the transactions should be assets or businesses, and one of the objectives is to reduce the number of transactions that get accounted for as business acquisitions.
Okay, and so why is this accounting standards update important?
It's important because a lot of companies engage in M&A activity, and when performing those transactions, they're trying to determine, is this a business or is this an acquisition of assets? Because the answer does have significant accounting and reporting ramifications. So under the current guidance, you're really looking at, did you acquire inputs, processes, and outputs, where the new guidance is actually having you use what they refer to as a screen to determine whether what you purchased is a business. And the screen essentially focuses on, did you buy a single asset or a concentration or group of similar assets? And if so, then under the old guidance, you could have had a business combination in that scenario. And so if you don't meet the screen, then the amendment has you further take a look at whether you at least bought an input and a substantive process that, when put together, could contribute to an output. And then secondly, if you don't meet the screen, the other part of the amendment is it does remove the old evaluation of whether a market participant could replace the missing elements. With that no longer being part of the evaluation, you will see fewer acquisitions resulting in business combinations.
So it's not going to be my television screen, right? It's a different
hopefully
thing than
not.
that?
Yeah, you don't want to use the television screen.
Okay.
It probably won't help you.
Probably best to clarify that.
With that, yes. You'll be looking at the screen a long time. I don't think it'll get you anywhere.
So who is this ASU going to affect?
Essentially all companies. So anybody that is doing acquisitions of assets and or businesses will need to evaluate those transactions under this guidance to see where they come out.
And when can we expect this ASU to go into effect?
For public companies, it will be 2018. For everybody else, basically 2019. And you can early adopt this if your circumstances line up. So I would just recommend people take a look at this standard and see if early adoption is available for them, if that's something they're interested in.
Great. And so where can companies find more information about this update?
Well, on our website, we have a resources section that has a lot of information for a number of topics, this being one of them, including this podcast as well as others. And you could also check out FASB's website. This is their ASU, and so they have all of their ASUs on their website. And, if you have any questions about it, anybody can feel free to contact me. My contact information is on our website, and you can get to me through a number of ways, and I'm always happy to answer questions.
Awesome. So what kinds of questions should a company ask their accountant as it pertains to this new ASU?
It's probably going to be less about questions and just more about collaborating with their accountant on what the answers should be, because the new rule will result in different answers than the old rule. So again, it may be less about questions and really looking at the facts and circumstances, and it's going to require some judgment on both the company's part, the internal accountants, and the auditors are going to obviously take a look if there's an audit involved. So I think collaboration's the big key.
Great. So last question before we wrap up, Steven. We're going to switch gears a little bit to our this or that section. I'm going to ask you a couple questions, and I need you to rapid fire answer with the first thing that comes to your mind. So first one is, what's worse, laundry or dishes?
As far as what's worse, I would definitely say laundry. We are a household of 5, so there's just a lot of it.
Way too much of that. Okay, so on road trips, do you prefer to be a passenger or a driver?
Always the driver. I enjoy being in control of my destiny.
I could definitely see that. And then last one, at the movies, do you prefer candy or popcorn?
Definitely popcorn with a lot of butter.
Butter's the way to go. Well, thanks so much for the helpful information today, Steven. Hopefully our listeners have a better understanding about how this ASU will affect them. We appreciate all of you out there listening and invite you to peruse our website, www.malonebailey.com, for more information about public company audit services, as well as some other useful resources. Thanks again, and we'll see you next time.